Hey, welcome back to another episode of Shashank Redemption, where I get the honor of talking to some of the hottest fintech and proptech CEOs and founders. And today I have the special privilege of interviewing Kirill Klokov. He is the CEO at Truv. That's spelled Truv. And we'll talk more about Truv and the kind of problems that's trying to solve, which is actually drives home for me because it's something that we get to use on a daily basis, or a problem that we have on a daily basis running a mortgage company. So we'll talk to Kirill about that. But before we do that, let's welcome him to the show. Welcome, Kirill.
Shashank, thank you for having me. I'm really excited to be on your podcast. Just a quick 30-second summary of what Truv is, and I know we'll talk about it more. It's an open finance platform. We work with hundreds of lenders in mortgage space, personal lending, banks, credit unions, and we help verify income and employment, verify assets, and do a lot of other really interesting things with consumer permission. It's consumer permission open finance platform.
Very well explained. Let's go back in time a little bit, Kirill. Let's talk about your education at Stanford. I know you did your MBA there, and then worked at Easy Home. Which when I read the description for Easy Home, I was very excited at what you guys were building back then, because I, again, think that that's a real problem that Easy Home was trying to solve. So walk the audience through just your initial journey here in the US with your education and the first work that you did at Easy Home.
My story starts with immigration. So I came to US in 2013, went to Stanford, Graduate School of Business. When I graduated, I wanted to always start a company. That was always the dream. I started one back in Russia, and I wanted to start one in the US. So I decided what's the best way to learn about starting a company, if not join somebody who've done it before. And I joined two amazing founders, Odysseus and Spiros, who one of them is now head of product at Splunk, and the other founder has been building a follow-up to Easy Home. The idea was, why don't we rethink the home improvement process and to an extent gardening as well. And if you talk to anybody in especially in the Bay Area, what do you think about your gardening services, and what do you think about home improvement? Everybody says it's non-tech forward, it's very slow, it's very expensive, all the great things and the right things to disrupt on. I had a lot of learnings at Easy Home. I can talk about it for hours. One thing that I came across, which was an inspiration for Truv while I was at Easy Home, because I was an immigrant at that time, I graduated. I didn't have a credit score, or I don't know if you can call 520 a credit score. I had a credit score, but it wasn't good. I tried to apply for a loan. After trading back and forth with a bunch of banks and one credit union, I realized that I cannot get them from anybody on any reasonable terms. And one of the reasons was I didn't have credit, but also they didn't do the right amount of diligence to verify my income. And I was perfectly looking candidate for that. I never missed a payment on my loans. So I think they missed out on the opportunity. And I saw that, what if I could build a technology later to solve their problem of verifying income and employment? That's how Truv came around.
Interesting. And then it's interesting how much parallels we have with our stories. I'm an immigrant, of course, as well. I came to the country much earlier than you did. I came here in 2006. But even when I was doing my MBA in India, I always used to tell my friends is that I'm doing it because I want to start a company of my own someday. And I got picked up by GE out of campus. So that was my first job, working for General Electric Consumer Finance. And I actually went on to work for a very small company where I was employee number 2, is because the founder of that company had built and sold a company before that. So just like you, I wanted to work with somebody who has done it before and learn from them before I started my own company. So I couldn't stop myself into seeing some of the parallels between your story and my story. So you mentioned that one of the reasons that you thought that you couldn't get a mortgage or a loan was because of the fact that they didn't do a very good due diligence around verifying income and employment for you. So is that probably the first time or the genesis where Truv came from? And how did that come from? And if it did, how did that start from just being that idea that you had saying, this looks like a real problem and I should be solving it someday, to actually working on it and founding Truv eventually? I'm sure a lot of people, I mean, millions and billions of people have ideas every day. That doesn't always translate into, say, building the kind of company that you have built, Kirill. So walk us through that journey, and you can be as detailed as you want. We really want to see how the idea became, the evolution of an idea, of being from just being an idea to being a real company. How did that happen?
To start, that was, I think, one of the pain points that I experienced as a consumer in the US. And I genuinely believe that as a consumer or as a founder, you have to have an insight. And the insight has to usually come from your personal experience. I don't know. In my case, I couldn't verify income, so I couldn't get a loan. How bad it is. And then if you start pulling the thread, you realize that there are millions and millions of people, especially in subprime sector, who are living in this constant recession. It's not the best way to put it, but that's how it feels. It's like you cannot get a loan. The interest rates are very high. So as a result, you revert back to payday loans. And that's the worst option, right? Or credit card debt. So usually it starts with a painful personal experience. And then as you learn more, and if you have a curious mind, you start looking into what else is going on. And I realized there's a lot of opportunity in this income and employment verification space. But it all started with that one painful experience. The other experience I had was at a company called Carta. I don't know if you guys are using Carta, but it's very common across startup ecosystem to use Carta for equity management, options, cap tables. Carta tried to build integrations with payroll providers. One of them, when we spoke, told us that, well, it's our data, and meaning payroll providers data. When we asked, can we get access to our customers' data, one of the startups, and they said, well, we think it's our data, so why don't you pay us money? Okay. And I was like, hold on. So you're holding somebody else's data and you're saying that it's your data. How does that work? And that I think was the second point where I was convinced that definitely this problem hasn't been solved, not because there's not enough immigrant or there's not enough folks who need income and employment verifications, because of how the market is set up. Payroll providers think it's their data, they want to charge you for it, even though it's consumer and employer data. And then banks and credit unions who need the data, they can buy it directly from payroll providers, but payroll providers are usually not set up to sell the data, so they buy it from aggregators. And there are a handful of aggregators in the space. The largest one does $2.5 billion in revenue. And as a founder, when you look at something like that, when you experience the pain yourself, you know there's a innovator's dilemma problem for the company to innovate and do something like what you plan to do. And there's a lot of opportunity. Then as a founder, you come to a simple conclusion: why don't I start a company? And that's when the second piece of starting a company comes into play. You have to have a team. And I'm fortunate enough to have friends around me that I always wanted to start a company with. Ilya, I knew him since undergrad. We both immigrated to US around the same time, and we've been always brainstorming ideas like, what do we want to start? So when the time came, we decided that this is the company we want to start together. He had roughly the same experience. And that's what prompted Truv to be started right around when COVID hit. We actually started in June of 2020, and we raised our seed in September or October of 2020.
And you talked about the size of the market a little bit. And I was reading Morgan Stanley's report. I think that came out recently, just a few months back. And that actually kind of goes into a market size that seems to be way bigger than where we are right now. I think the report says that we are looking at a TAM of about $11 billion, while the current revenue is only $4 billion. Of course, they talk about US plus UK in this case, just to clarify to the audience. But that's a lot of potential for growth that we are looking at Truv. You mentioned earlier in the 30-second brief that you already work with hundreds of lenders and other financial institutions across the country. But that's still a huge kind of ramp up here and a potential runway that you have from, say, a 4 billion of what the industry is working at right now versus 11 billion in the next few years. How are you planning for that kind of growth and to take the market share from the market leader, at least in the US here, which is the Work Number?
I think there are a couple tailwinds that we have. First, the privacy and focus on privacy is becomes really a priority in the United States. When we started Truv, there was only CCPA, and now there's 25 states that are looking into a version of CCPA. Eventually, we will have a version of similar to GDPR. CFPB now is involved, that they're going to make clarification about consumer permission data. So there's tailwinds that help us get access to the data and not worry about the legal part, the legal challenges around accessing somebody else's data on their behalf. In terms of how the market grows, I think that the gist of the report that you're talking about, the Morgan Stanley report, was there's a lot of opportunity for lenders in the United States and elsewhere to look at the consumer holistically, right? You don't look at consumer only based on their prior history. The fact that for the last 5 years I paid off my credit card doesn't necessarily make me a good candidate for a mortgage, which could be thousands and thousands of dollars. You also want to look at the consumer or the applicant and understand them, what we call a 360 kind of a P&L plus balance sheet plus cash flow, similar to how you analyze a company. You want to know how much money they're making, how they're spending, what assets they have. And majority of financial institutions, at least those that are not fintechs, they don't have those capabilities. So the companies that help them understand the ability to pay are going to thrive, and that's why income and employment verification market is going to grow.
And it's I mean, of course, Truv can take market share from, as I mentioned, the Work Number because of several benefits that it has over the Work Number, but also a large part of the market, Kirill, in my opinion, or in my experience running a mortgage company and going through verification employment income practically on a daily basis, it's just the market which is more manual. So there is no digitization of their income. There is no digitization of their employment. They could be employed by mom and pop stores or just payroll companies that probably do not feed into a product like, say, Truv. What do you see a future for that? Because as a mortgage company, I'll be extremely interested in figuring out, hey, will there be a time where 90% of my consumers, so to say, can go through an automated verification of employment income? And as you know, that's probably one part of the process in the mortgage which takes the longest, going back and forth, trying to verify income, pay stubs, employment. And if you could do that, especially with a certainty early in the process, that just dramatically changes the consumer experience from a mortgage perspective. So what do you see in terms of future? Where do you see it's heading? Are you seeing any changes with where the manual verification was and where it's heading now?
It's a great question. One of our advisors told me, well, Kirill, follow the money. When I asked roughly the same question, it's like, how do I verify 100% of applicants? He's like, follow the money. And even though if you start unbundling like the 165 million working Americans plus people who have might be applying for a mortgage or for a loan out of retirement, the money to repay the loan has to come from somewhere, right? And it could be your wage, it could be your gig, it could be your benefits, it could be your self-employment income wherein you submit tax returns to IRS. There are many ways to look at the data and access to understand you as a applicant, what's your ability to pay. And that's exactly what we did. We started with payroll, so I could understand hourly employees and I could understand W-2 employees really well. Then we extended to other types of income, like veteran affairs. We could log in on behalf of a veteran to their account, read the letter, and return reliably back to the lender that this person is actually making, say, $1,000 a month. Then we looked at IRS, and getting data from IRS also is possible through an API. It's just not as trivial as you might think. There's a way to get the tax returns. And then finally, if you're getting just a paper check and you work for a mom and pop shop, or if you work for cash, you end up putting that money in the bank account most of the time, or some sort of fintech account.
Sure. Mm-hmm.
And if you can connect to that fintech account, you can understand how much money reliably is getting put into that account and how that money is spent. So the progression of the product was, let's just launch payroll. And then eventually we launched tax returns. And now we launched bank aggregation. So as a result, I can look at you holistically and say, well, if I follow the money, I know how you make the money and where you spend the money. And in case you cannot log in into the payroll account, or if you don't want to share the credentials, you can always upload a pay stub or W-2. We will process it programmatically, and we'll tell you if there's any risk of fraud associated with that document. It doesn't get you quite to 90% yet, but the highest I've seen was 75, 80% of the time we would be able to verify somebody's income if you just say, well, Shashank, here's Truv, why don't you try to verify income? And I think the remaining 20% is people who actually never wanted to verify. Because with consumer permission data, as you can imagine, you need consumers' intent and willingness to partner with somebody like Truv to access their data. And if there's no intent, I mean, there's nothing we can do with that consumer.
Of course, yeah. I mean, and that's, I think, the entire premise of your product anyways, that is consumer permission data. So if they don't want to give you that permission for whatever the reason might be, of course you can get to that. And that's why we'll probably never get to 100%, but I mean, even 75% is significantly higher than what we have experienced in the past. Let's talk about how quickly it has become so successful, of course, with the clients that you have, with the traction that you're getting, but also in terms of the funds that you have been able to raise. I mean, you raised a massive 50 million Series C, and then almost less than a year after that, from what I understand, and correct me if I'm wrong with my numbers here, TransUnion made almost a 25 million equity investment. That's a lot of cash in a market where fundraising is not that easy. What do you think is driving that kind of interest in Truv with some of the leading VCs here, not just in the Silicon Valley, but also, say, players like TransUnion?
Shashank, I think you're looking at Truework, not Truv.
Oh, okay. So
we can redo this. I know you're looking probably at Crunchbase. Find Truv. We raised I think 3.5 Series seed, and then 25 Series A.
Okay. It's still a lot of interest, Kirill. So let's talk about what's driving that.
Okay. If you want to re-ask the question, I'm happy to we can just edit it out, right?
Yes, we can. So let's do it again.
Let's do it again. Yep.
So, Kirill, I see that, of course, Truv has had very good traction within the industry. And by the way, just to kind of a disclaimer to the audience here, InstaMortgage uses Kirill's company's product, but also not just within the mortgage industry and other institutions, but also within the VC world, within the investors in terms of raising capital. Why do you think it's driving that kind of interest in Truv? Is it just the TAM that we talked about initially earlier in the call, the fact that we are at 4 billion, potentially going up to 11 in the near future? What's really driving that kind of interest? And what's your really fundraising philosophy? Something that a lot of our audience are startup founders or want to do a startup, and that question comes up a lot, which is, when should we be raising, and why should we be raising, and how do we raise? So any kind of lesson around fundraising and what's driving the interest will be very useful.
I'm not a professional VC by any means, so it's hard for me to exactly what drove the interest. I can talk that I think how what I see the pattern in terms of VC market, what VCs are looking for. First, they're looking for big TAM. So as you know, most of the VC investments, VC bets end up being failures, small returns like 2 to 3x, and then one or two companies in the fund would return you the whole fund and give you a hefty payout. So to get to that volume or get that type of investment, you need to have a company that could potentially grow to hundreds of millions of dollars in revenue. And it's much easier to do it in a big TAM or a very high velocity technology like AI, for example, like the LLM models and so forth. Or you can do it in an old industry like where we are at with a slightly different take on the industry. And that's where I think the thesis for Truv has been like big TAM, the industry is going to go through a retooling of how the data gets acquired. It's much harder to get the data by buying the data somewhere else and then using that data to verify somebody's income. That is getting harder while consumer permission data is on the rise. So if the industry is going to go through retooling, then as a result, you want to invest in companies that are making the bet in a big market with a new technology that has tailwinds. And that's why I think Truv had the success in fundraising that we had. I genuinely believe that Truv has a lot of opportunity in terms of how we can change the industry. So we're working a hard day in, day out on delivering on the vision that hasn't changed really since we started the company.
And the second part of the question, Kirill, around your own fundraising philosophy, are you, especially in a tough market like say 22, 23, are you looking at, say when an opportunity arises, just raise as much funds as you can? Or do you do that in the depending on what your needs are? Are you looking for a certain kind of investors and VCs to invest into? Just walk me through what Truv's and your philosophy is around fundraising.
I think there are a few things. First, you shouldn't raise when you really need money. We don't need money today, so we're not raising because I think we're probably at least months away from even thinking about it seriously. We have a lot of theses that we need to prove and kind of grow the revenue with the money that we have in the bank today. The second part to the fundraising, I once got advice from the founder who raised $1 billion or over $1 billion. Like, well, Kirill, if you stop at a gas station, just fill up the tank as much as you can. So you should raise more money than you actually think you need, because there's no such thing as perfect execution.
Sure.
I can tell you that at Truv, I think we execute perfectly on product and engineering. We didn't execute perfectly on go-to-market. But had we not raised a little bit more money back when we were raising seed or Series A, we probably would have gone out of business, but we have a lot of opportunities still, right? The thesis didn't change. It's the market, unfortunately, took a nosedive for the worst, and you know what happened with interest rates. And I'm not, I don't think that it's worth explaining that the volumes in mortgage are down 70%. So we need to, if you raise money, you should probably raise a little bit more than you need, as much as you can. And the third thing that I think my personal preference is, you have to have reasonable valuation, and you'd rather go to the market more often than you just load it up for like 3 or 4 years and wait to run out of money. Because your employees want to know how much the company is worth, and they want to be able to refresh that every couple of years, I would say, maybe 2.5 years. They would want to know like what's the company's worth in the market, because you need to attract new talent constantly. So these are the 3 principles, at least from my perspective. I'm not fundraising expert by any means. I think this is a better question for somebody who actually invests about like what they're looking for. But that's what I saw from the founder's seat.
No, that makes sense, and that's what I was trying to get a sense, perspective from the founders. Of course, and most founders like you have heard on the podcast saying the same thing, is that, hey, we are not fundraising expert, but it's always good to get their perspective on it. Now, Kirill, you mentioned that go-to-market strategy could have been, or execution could have been slightly better. Also, there were macro factors, of course, that we know especially in the mortgage space. But you also mentioned that your product and engineering team did really well. I saw you posting on LinkedIn once that you have a 5-minute test to see if your product management team is doing a good job or not. Talk to us about that. It was an interesting post that I saw.
I think as a founder, you deeply care about product, right? You have to, otherwise you have very little competitive advantage to the big companies, right? You have to be better than the big company, and you move faster, and you need to be this type kind of, as a founder, you have to not only think about the vision, but also about details really well. And one of the tests that I often do is I would open the product on a random day and I would just play with it for 5 minutes. I would say, okay, how do I look at my billing? And then I would find bugs or problems or issues. And usually they're small, or I would test a new feature. And if you don't, as a founder, don't spend enough time, I would probably spend like an hour and a half, maybe 2 hours a week playing with the product. It's not a lot of time if you think about it, but that's probably more time than any of our customers would use our product in their lifetime. Because to verify income and employment, you just need like 10 seconds or 20 seconds to enter your credentials. When you open the dashboard as a developer, you would probably spend 30 minutes looking up your API keys and plugging them in somewhere. So I would say I'm obviously have to be a CEO and provide the vision and the hope and the faith for the company, but also I consider myself to be chief QA officer, where I test the product and I see if in 5 minutes it can accomplish my there's a cool framework that's called jobs to be done. If it can accomplish my job of what I'm trying to get to, if the product team has been very clear and precise about what we're trying to accomplish here, then there's usually a straight path. And if it hasn't been the case, then usually you just get thrown into the deep end, and then you're trying to dig yourself out of it. And that's why reduction of features, reducing features, hiding features is really important for the product teams, because all products over time tend to grow. And if you open something like, let's take Salesforce, it's just so massive that you need to have a Salesforce admin to even start with the most basic things. And that's why I don't want to be Salesforce in terms of product management. I want to be more like a HubSpot, where out of the gate, it works 90% of the time. And then if you need some customization or very enterprisey, then you can obviously go and optimize it.
That's brilliant. It's interesting is that, I mean, product management is like art or writing to an extent. I think in the first episode of my podcast, I mentioned Antoine the Saint-Exupéry, who said that perfection is achieved not when there's nothing more to add, but when there's nothing left to take away. It's almost like, don't make it too complicated. Eliminate as many clicks as you can for the consumer or for your client to find the solution in as easy and as way as possible. But it's interesting that you go back and you mentioned yourself as the chief QA officer, so to say, is because that's not something I hear from a lot of founders or CEOs. We have heard about recent stories about Uber CEO saying that he will be like an Uber driver for a week, or a Starbucks CEO saying that he'll be barista for a week, but not something that we hear every day. So that is interesting that you go back and keep digging your own product to see what kind of experience consumers are having while interacting with your interface.
It keeps us honest as a team and as a product organization to really build a product.
That makes sense. What's next for Truv? I mean, again, we keep harping on the fact that there's a big market opportunity here, both in terms of taking market share from the current leader. You are still a challenger brand, so to say, but also just the delta between where the market is and where it can be. It just gives you a huge amount of opportunity in the years to come. How do you prioritize stuff as the founder and CEO in terms of what we should be working on? Because sometimes too much opportunity could actually be a bad thing. You get distracted by doing probably too many or too much, and just kind of go all over the place. And that has resulted into some of the company's failures in the past. How do you keep yourself, in your own words, honest and keep yourself on track? And what are you looking at in terms of roadmap for Truv over next, say, 6 to 18 months?
That's a great question. I've seen companies be too ambitious, invest in adjacent projects, pet projects of executives, and so forth.
Mm-hmm.
And that usually is very capital inefficient. For us, we always, one of the values for Truv is customer obsession. And the idea behind it comes from Amazon, where, I mean, if you don't really understand your customer, if you don't understand the problems that you're trying to solve, you just rather just shut down the shop and go work elsewhere. And I keep reminding my team is like, if you don't understand the customer problems, if you don't understand how to solve those problems 100%, then I don't think we'll be as successful as a business. So what problems let me ask you a question. What problems and verifications do you have today?
Yeah.
What are you trying to solve?
Correct. So, I mean, as a mortgage company, the two problems that we have around income and employment verification is, first, of course, the reach of the service providers that we have used in the past, where we have not been able to get to as many employers as we can or we want to. Two is probably the cost. Three is constant re-verifications that the mortgage process required, because typically a process could take, say, 21 to 30 days, sometimes even longer. And then the old verification that I did is no longer relevant now. So I have to go and now re-verify and thus incur the cost again. So those would probably be my top three pet peeves around verification of employment and income that I've faced with the, say, the market leader that I've been using until now. Right.
And that's exactly what all the mortgage lenders experience.
Mm-hmm.
So if you summarize it beautifully with these 3 points, right? Coverage, price, and re-verifications, access to the data consistently, and the quality of the data.
Yep.
So what I tell my team constantly is like, why don't we optimize 3 things? Coverage. How do we get to 100% of the solution for this problem? How do we make sure that the data is high quality? And the high quality data in mortgage market means that it's accepted by Fannie and Freddie to an extent. Right? That's the second. And third, how do we stay price competitive? And fortunately for us, because of our business model, we don't need to buy data from third parties. We mostly use the data that consumer gives us access to, or we access on behalf of the consumer. We don't have the cost, so we can keep our prices to be very competitive. And what comes next for Truv is really trying to get to 100% of the solution, get certifications, and keep the prices competitive so we can keep winning the market, or we can keep winning against other companies in the space. And the space is very crowded. There probably, if you start Googling it, they probably will find 5 or 6 companies that do something similar to us. So how do you stay out? How do you stay above the market and above the crowd as a business? And how do you present yourself in a way that actually makes a difference for our customers? So that's exactly what I was talking about when we started, right? Like, we executed great on the product. The product has been very consistent, very high quality, but now the question is, how do we distribute this market? And we're just distribute our product, and we're just scratching the surface on that.
Yeah, makes sense. I mean, distribution has to be the key. I mean, product by itself, as great as it is, without distribution fails practically every single time. And so I think you have quite a traction there, but it's still a long way to go. So it just makes sense that that's on the roadmap in terms of widening the distribution reach. And going beyond mortgages, of course, there are multiple different avenues that Truv already caters to, and different industries that Truv caters to. And we're coming to the end of this, Kirill. And one of the questions that I always end the podcast with is books. Something I'm very passionate about. Something that to a large extent has changed my life, at least professionally. What are some of the probably your top 2 to 3 books that you would recommend? And it does not have to be completely work related, but anything that you have enjoyed reading, has made an impact to you, either personally or professionally, that you would recommend to our audience.
One book that I keep going back to, and we read it every year, is High Output Management. It's a book by Andy Grove.
Yes.
He was the CEO of Intel for the longest time, and he went through a lot of transformations of Intel. Intel used to be a memory company, not a CPU company, and he went through those transformations while keeping the company market cap growing again and again in very competitive environment. And Intel was successful to an extent because of how he approached the management science, the OKRs, setting up the OKRs. So that book really changed my perspective on management and how to think about your management team and how to think about your organization overall, and make that team successful through alignment, through good one-on-ones, through really managing the high output and optimizing the output from the team. So that was the book that I first read back in business school, and I kept rereading it every year, or like re-listening to it every year. So that would be. So that would be. Yeah, and the other book is called Measure What Matters. That's John Doerr. I think he worked at. He's one of the most successful venture capitalists, and I met him through our investor Kleiner Perkins. He's just an incredible man who changed the Silicon Valley like nobody else did in the last 30 years. And his book, which is called Measure What Matters, is an excellent book on like how to make the team organized and how to keep the team accountable for delivering on the goals and how to write OKRs well. Really, it's a science. And if you're not familiar with the OKR model, it's objectives and key results. If you have a very highly aligned team that looks at the problem and tries to solve just a handful of problems at a time, I think as an organization, you accomplish much more than if you have just the KPIs or any other type of management frameworks. I found the OKRs to be the most successful at least for Truv and what I saw at other organizations. I would go with these two books if I were to pick my top two.
Yeah, great books. Both of those books are on my Audible as well. And the High Output Management is one of those rare books that I have on Audible and a paperback. So it's totally second your opinions. And for anyone really at any stage of your entrepreneurial career, even if you're not a founder, if you're just maybe managing a company or managing a team, both those books are just brilliant. So great recommendations, Kirill. Thank you so much for that. And thank you for taking time out from running Truv and everything else that you do, and making time for this podcast and sharing your insights with our audience here. So appreciate you being here.
Thanks for having me. It was a pleasure.